Welcome back to another episode of the XRP podcast. Today is going to be a good one because we are going to dive into what's going on in the market, and there is a lot happening. Everything from Korea freezing their stock exchange. You've got Kraken getting a Federal Reserve master account. You've got Ripple causing ripples in DC and maybe shifting Donald Trump's thinking. We'll talk about all that, and it's going to be a good one because we'll have, of course, Abs joining us from Good Evening Crypto. You guys don't want to miss it today. What I want to ask you guys to do before you do anything is like and subscribe. One other big thing that we just launched here on this channel is we launched memberships. You guys asked for some way for us to open up some opportunities. Well, we've done it. There's a couple of things you can do. We have early access on some content. So if you're in the membership group, you'll get access there. I think it's on the XRP Insider. You get 12 to 24 hours lead on a video that goes out. So you guys get first dibs. That's a big one. You also, all members will get access to our member only live streams. And that's right. We're only doing live streams now on this channel for the XRP community and also some of the other communities out there, HBAR and Stellar. Of course, we know you guys are watching today, so you guys can do that as well. I want to take a minute, guys, and just invite you to join the Baron Market Edge private member group. You guys can do that by just clicking the link down in our description. This is your insider's edge to the AI and crypto money revolution, which is what we really focus on here on PBN. This is additional research that I do along with our team. And we have a pretty significant team on our research around not only what guides our episodes, but a lot of that research gets built into more content that I drop here on the Baron Market Edge. We do market trends and sentiment analysis, which can be anything from tokens to all sorts of strategies. This, of course, will also guide you over to our Telegram group, and we give this as elite community access. You get bonus content over there, including tax guides, as well as different kinds of asset guides out there that we drop all the time. This is your 10-year vision in action. All you have to do, of course, is just hit that little subscribe button or join the community and get in on it. It's absolutely free. It doesn't cost you a thing, so check it out. Check it all out. We're going to get into the news today and just kick it off with none other than Abs coming in from Good Evening Crypto. How are you, Abs?
Doing well. Thanks again for having me, Paul. Excited for today's episode.
It's a hot one today. We've got a coin market cap right now. When you look at the overall market cap, setting at 2.38 trillion, up slightly. Bitcoin trading as we're where are we? 70. Well, now we're down a little bit, but right now decently at around 71.7. So, and then of course ETH holding the 2085 mark. XRP climbing back up the chart at 141. So all that good stuff is happening in the market. When you woke up today and you thought, what's the first thing that is going to happen that I'm going to have to pay attention to? Was there anything you were watching today that was like, oh, geez, here we go?
President Trump. And that's as simple as I can make it, guys. One of the things that really caught me off guard last night was the tweet I'm sure we're about to go over, where President Trump was not only calling for the Clarity Act, but he was calling for the banks to capitulate. That was the big surprise for the crypto community. Also, it's pretty ironic that right as the Clarity Act is about to get passed, the market is trading 65, 55% down on all these major projects. Wouldn't surprise me at all if 2-3 years from now we look back and we go, that was the buying opportunity that we were talking about. But I'm sure we're going to get into that. So that was on the forefront of my mind.
And you know, the issue, I want to kind of just bring up a couple of points here. I'll bring up my stream here on X that kind of got into this last night. And one, of course, I think there's two things that shifted Trump's mind. I think this dude named Garlinghouse had a little bit of a play here because, you know, Brad has been very cagey on where he stands and where Ripple stands. But right here, he kind of hit on it right here. An extremely pointed message from POTUS to those who are dragging their feet on clarity. And this is and always has been about the best interest of the American people. This is a great statement by Garlinghouse, and it finally, I think, put Brad in a position where he picked a side. And I think he picked the right side. This is something I've been a little bit contentious about with Ripple, is that they haven't come out before this, but I'm glad that this happened. And I think that this occurred with, of course, maybe some conversations in DC with President Trump directly. So when you look at Trump's statement here, there it is, Genius Act being threatened and undermined by banks. Threatened and undermined in the first sentence.
Yep.
He is not playing around here. This is like a message to Jamie Dimon. It's a love letter.
You know, what's interesting as well, Paul, is that if you listen to how these banks are kind of structuring their responses to this, one of the things that's really clear is all of them are planning on launching digital products.
Yeah.
And Jamie Dimon actually came out during the interview you showed yesterday where he said, we're one of the largest users of blockchains. And so it just goes to show that behind the scenes, if you listen to what BlackRock is doing as well, one of our friends, Matt Hogan at Bitwise, he gave a great analysis earlier this week where he goes, BlackRock is planning on tokenizing every single one of their ETF products on a public blockchain in the next 3 to 12 months.
Right.
It is impossible for BlackRock to be planning on migrating trillions of dollars onto chains without guidance from the United States government. So that could be another big indicator that lets us know institutions know this is coming.
Yeah. Well, I think we've known it's been coming for a while. I think the question has always been the issue that the White House hadn't taken the side. You know, they hadn't really drawn the line in the sand saying, you guys got to get this done. And if this is the holdup being the whole stablecoin issue around yields, I think this is maybe the final, narrative that you will probably be talking about, at least in the terms of, where we are now. Because I think the issue now is maybe we've won a battle, but I think the war has just begun, because the banks are not going to go quietly into that good night for sure.
Right.
I think they'll fight with some new products. I think they're going to come in hard with some new blockchain oriented, maybe some native products out there in general. I think now you're dealing with, and I don't know if you saw the statement that I put out here. Let me kind of just bring this one up. And it was where I said, I think Jamie may have opened up to the beehive of crypto. Things are rolling in real time right now. Never underestimate the banks. I still believe that. Do not call these guys out. So if you watch The Godfather 2, you know what I'm talking about. Keep your enemies very close.
You make it
Corleone says it best.
You know, and Charles Hoskinson had a great reference to the Terminator earlier this week, and I think this is even better, Paul. But one of the things that's really ironic kind of about the Clarity Act, if you listen to some of the people who don't want to see this passed, is that they're saying this is going to give a free pass to industry participants like Ripple and like the XRP ledger. That is the complete inverse of what we went through over the past 4.5 years with the war on crypto. And there's a great Elon Musk quote, since we're throwing quotes out there. He said the most ironic outcome is oftentimes the most likely. How ironic would
it will be so ironic.
Post Clarity Act, we're looking at an environment where the Ethereum Cardano community is frustrated that XRP now has a free pass inside the United States. So whether you're an XRP investor or not, you got to admit the irony is clear and is sitting in front of our faces.
If you guys haven't read James Thorne's dissertation on this, you should, because he really levels out the whole issue around Jamie Dimon, saying he wants a level playing field for stablecoins. What he really wants is to make sure nobody can offer you a better deal on your own money. So he goes into a full thing. Hopefully you guys are watching, but it's Dr. J Strategy over on X. Read his post there, because he goes into a lot of history around this, and also why yield-bearing stablecoins are really kind of really set to, I think, blow up these bank cartels, because you're in a position right now. And I know Diamond went on and saying, hey, well, they should just get a license, a banking license. I'm like, well, there's a difference here. Okay.
Yep.
You're not in a fractional reserve system when you're in a stable coin. You're in a 1-to-1. So it's not even the same game,
Yep.
For this. So completely they're out of their element right now. Do you think the banks finally fold?
It's a classic example of them saying one thing and doing another, right? You listen to him and you think, oh, maybe this guy's being objective. Maybe he's being honest. And then you remember, oh, he works for JP Morgan. So I think the one thing that he really hasn't been transparent about in all of these interviews is that stablecoins don't participate in fractional reserve lending. And I know most of your audience, if not all of them, know what that is.
Yep.
That means for every $100 deposited into JP Morgan, they can lend out $900 in correlation to that. So as depositors begin to see, oh, I can earn 5% on Coinbase or 5% on Kraken instead of just earning that 0.01% in my JP Morgan savings account, they're worried about the natural migration to better products. Now, here's what I don't think JP Morgan is calculating, or at least they're not being transparent about, is that if United States exchanges aren't able to offer a stablecoin yield, people are going to move that money offshore. I have friends who during the war on crypto, and I'm not going to out anybody, When they began delisting all these yield bearing products, you know what they did? They got a VPN and they found an app that would do it. And so I think the savvy investors are going to find solutions. And I think that crypto investors in particular, we are the most savvy and the most technologically savvy investors
For
in the
sure.
American economy. So
Yeah.
I think we're going to find solutions, whether Jamie Dimon thinks we're going to get a United States yield or we're going to have to go offshore.
Well, and it goes back down to this whole passive versus active yield situation, which I think was originally one of the elements that were in the negotiations. But I think there still will be some sort of, I think, consensus between the two camps on where this plays out. However, the difference now, of course, is that President Trump is much more active on this. And not only that, you have to consider he's starting to listen to some other people. And one of the points I want to get at right here, there's two things. One, he had a meeting with Brian. So this to me started to state, I think, the position of where Armstrong is. Now, again, listen, I'm not a friend of Brian or Coinbase. I'm just saying I know that they have a dog in the hunt. They're going to make a lot of money on stablecoin yields. Okay. Circle and Coinbase, yes, this is going to be good for them. It's going to 7x their business. That's why he's fighting for Americans. But in the meantime, maybe there's an opportunity here that I think starts to slide over into other areas. And even Patrick Witt, this guy right here, who had been a little cagey over the last several weeks on where he stood, all of a sudden he is going head on with the banks. I don't know. This is a very unusual turn of events, happening right now.
And Paul, I think you could see the correlations too. And I brought this up last time we did a podcast, but 1996, 1997, I will not forget what happened during that time. Telecom Act gets passed, internet stocks across the board do a 50x over the next 3 years.
Yep.
I'm anticipating some major momentum, if not even more momentum in the crypto space. And here's why. The tokenization of real world assets, that's the real issue. And nobody's debating it behind the scenes right now. Tucker Carlson did a phenomenal interview earlier this week, and I can't remember the woman that he was interviewing, but she said that the actual end game here with the Clarity Act is expanding into a digital monetary system where guys like JP Morgan have more control. So while they may play like they're opposing this or there's two sides of the aisle, there's one direction that this market is headed, and it's digital asset products being offered by the banks that will not get done without the Clarity Act. So although we're debating the stablecoin yield, I think if we focus on the important issues, both sides agree we're moving into a digital era of finance. And if the United States doesn't step up, our counterparts like China are going to dominate this sector.
Yeah. Well, it's what Trump was saying in his post, but this is something that I and a couple other analysts have been talking about for some time is this all a facade? Is it really just a fake fight out there in public? And all of this is theater being built around what you're talking about, which is really an underlying model of replacing the physical dollar with a new digital dollar without a CBDC that can be exported globally and continue to reign power. Because if you look at what's happened in the Middle East, you look at what happened in Korea right now, last night, with Korea halting their stock exchange after an 8% drawdown, which was, unwilling for them to, kind of fathom that. This starts to shift things pretty big in a long way. And I think especially from the side of where the banks are coming from. And that I think is the concern I have right now is what do they really have up their sleeve? Yeah. So.
And maybe even Larry Fink revealed his hand a couple of years ago. He did an interview with Bloomberg and he goes, every stock, every bond will be tokenized on a public ledger. But what does it really come down to? Voting rights. And he talked about that very briefly in that same
100%.
episode. So I think when you zoom out and you say, where is this industry 5, 6, 8, 10 years from now? It's fairly obvious. Tokenized assets are going to be launched at scale. People are going to have digital IDs. You're going to have some form of a social monetary credit score, however they decide to kind of market that product. But the groundwork
You're saying bad words. You're saying bad words, man.
Don't shoot the messenger, as they say, right, Paul? And I think the important part that I think innovators and early adopters will understand is that we're still about 4 or 5 years away from these things being launched, and the Clarity Act is laying the groundwork for it. But my optimistic point of view, because I always like to find the light at the end of the tunnel, is that people who are early investors in these products will be able to profit off of this growth and maybe even protect themselves with the wealth that they're able to generate for them and their families.
I mean, this gets into a much more moral compass topic that is hard for me to come to grips with. And that is that with the element of AI moving into society, with the digital dollar now, as you whatever you want to call it, it's going to be stable coins that are now being exported around the world. When clarity goes through, it's just a matter of time. The banks are probably going to be one of the biggest, I think, proponents of this. And then you have the issue of the divide, because it's those who own assets and those who don't.
Yeah.
And that to me is maybe the biggest issue facing our societies today. And which is why, heck, it's why I do this show. Is hopefully an average person who has never done anything in investing gets into a digital asset for the first time. Not saying go out and put your life savings in anything. You should always be and do your own research, but just getting in the game. This is the first time they really could. So I think it opens up an opportunity, hopefully, to kind of bring the working class into the next evolution, hopefully into the class that of wealth building for sure.
And you know what it reminds me of? It reminds me of a quote that I think Donald Trump gave at the World Economic Forum, where he said, "The future doesn't belong to globalists. The future belongs to patriots." I'm not sure that applies to the financial system. If you look at the
Mhm.
direction that we're heading monetarily, we're going towards a global digital system.
Yeah,
And they're going to roll out the catalyst, like you said. Is all the world a stage? Is everything sort of theater, but we're all being walked in the same direction? And a good
mhm.
example of this you kind of drew upon during your podcast yesterday, where you talked about whether you voted for Kamala or you voted for Donald Trump. It seems like both candidates were going to bring us into a war with Iran. And
Yeah,
this may be a similar situation where whether you side with the crypto companies or you side with the banks, they're both working towards central bank digital currencies, or at least some form of more monetary control. And
yeah.
so that may be the dichotomy that we're all kind of have to come to terms with, is that if we're being moved in this direction, how can we protect ourselves and maybe profit off some of these developments?
Yeah. Well, it was the statement, very clean on this morning that I put out was just, hey, we're going to win this battle, or it looks like we could, but this war has just begun. And the next, I think, 5 years into 2030 are going to be critical around a lot of things. And I think there are going to be a lot of you watching this and listening to this right now. You're probably going to have a line in the sand somewhere that you draw on whether you're going to participate in this system the way it's being built, or if it becomes something else. And that is something that is unique, because I know there's a lot of people into privacy tokens. There's a lot of people looking at privacy in general now, which could play into this. But the gap is definitely narrowing, very quickly, for sure.
One last thing on this, Paul, is that if you think about BlackRock, right? And I always come back to BlackRock because they can change the entire game. If they had launched an XRP spot product, that would have been the largest XRP spot product in the market. It would have validated the token, would have
Yep.
given people a sense of direction, but they decided not to do that. And we heard this big update out of Matt Hogan. It really stuck with me, where he said in the next 3 to 12 months, we're going to see all ETF products tokenized on a public ledger by
Mhm.
BlackRock. Every single product they offer, stocks, bonds, gold, everything is going to be on a public ledger. Well, why hasn't Larry Fink talked about XRP? And I
Yep.
think one of the reasons and one of the theories that I have is that in the background, if you look at the connections between Ripple and BlackRock, there could be much bigger things at play. And what am I really getting at here? If we begin to see BlackRock tokenize these real world assets on the XRP ledger, that is a far bigger narrative than launching a spot ETF product. And it
No
may
doubt.
be one of the reasons that these companies, both Ripple and BlackRock, have not been willing to make public statements about one another. Larry Fink wouldn't do it when he had an interview with Charlie Gasparino on Fox. Brad Garlinghouse wouldn't do it when he had an interview with Bloomberg. He goes, I know BlackRock has made some statements. We think it's inevitable for the XRP community overall. That was a direct quote that he said in regards to
Yep.
BlackRock launching an ETF. So there's something going on in the background. And I do feel some sort of a responsibility as somebody who studies this content to figure out what could be really going on here and how can I bring that to our listeners. So one of the theories that I'm beginning to indulge in is the idea that BlackRock, maybe it was never about the ETF, maybe it was about the tokenization of real world assets and the
Mhm.
XRP ledger being selected as one of a half dozen blockchains that they're going to do that on.
Right. Well, and this is a factor that I think a lot of people have been, speculating for some time, is what blockchains will become the rails of what this is going to look like. And it's already clear that Fink and others have set the destiny in motion. Now you have finally, either you have the Trump administration either waking up to it, or maybe it was the plan all along, was to draw the banks out, make them look like stooges, and then hammer it home and build an alternative system that they can either be part of or can be against, depending on where they land within that. So definitely a different time right now, for sure.
To comment on that as well, Paul, is that if you think about Trump's journey into crypto, how did it start? Well, it started in 2022 when he was debanked. So wouldn't it be very fitting if 4 years later he comes back and he makes the banks kind of be exposed in their unfavorable business practices, to put
Not
it
a good
politely?
thing. Not a good thing. Sometimes I don't know. He's a cagey one, that President Trump, that's for sure. He's the cagiest president I think we've had yet. Listen, this was news right here. Swift partners with BNY Mellon. Everybody started I don't know if you got DMs last night, but I was getting DMs all over the place going, "See, I told you so. XRP is toast. You're done. Get ready." And I'm like, "Okay, here we go. All right. I get where you're going. I understand it. It's okay. There's not a problem with this, but I think when you look at the strategic partnership right now, because remember, yes, BNY Mellon because you got to remember they're also partnered with another 30 different, banks as well. I'm talking about Swift.
Yep.
And many people have said this is the Swift killer, with XRP, but now things have changed. It really boils down to just a few things. And I think the biggest one, yes, there will be multiple systems out there, but let's face it, this is still a pilot. It's still a prototype
Yeah.
versus a live and proven model. That's why I think this race to clarity is so important, because it does possibly position XRP out in front quickly. I mean, they have 300 partners. Granted, Swift has 11,000 institutions, but still speed, XRP or RLUSD, which are great settlement devices, versus stable coins and CBDCs, because that's what would be on the other side over on Swift. So what do you think about all this?
I think it's obvious that the BNY Mellon connection is going to become more important, not only for Ripple, but for Swift here. And for anybody who doesn't know, BNY Mellon is the main primary custodian for the RLUSD stablecoin.
Yep.
We've seen really strong connections between BNY Mellon and Securitize as well. Well, Securitize, if I'm remembering correctly, is a subsidiary of BlackRock.
BlackRock, yeah.
They're tapping into the RLUSD stablecoin. So whenever I see headlines and articles like this is a practice that I've come to utilize to my own advantage over these last few years of doing crypto research. I never take it at face value. I always go to AI. I always go and do my independent research, and I say, well, what's really going on? Well, Swift partners with BNY Mellon to design a blockchain-based ledger for cross-border payments and tokenized assets. If you really read that statement, it's extremely vague, right? One of the things that I think our listeners should understand is that Ethereum and the layer 2 narrative is slowly dying before our very eyes. It is these layer 1s that are going to become far more important over these next half decade or so. And this could be another great example of that, where, Swift and BNY Mellon, if they plan on launching their own blockchain, here's what I've learned about crypto. It's almost a given that they're going to have to launch a layer 2 on top of Ethereum, or they're going to have to tap into one of these L1s like we were just discussing previously. So that's kind of my take here. It's not the face value headline that's important. It's what we can figure out in the background to what's actually being developed. And that's what I think is being tapped into.
Well, they have already, obviously with Linea, they've already put in their, moniker around a layer 2 right now within Ethereum. So I think, and look how far that's come. You heard the announcement and then nada. Nothing came, nothing, no tools, no products have been launched. Now, granted, Swift could launch a product tomorrow, but right now it's still in hypothetical pilot and, phase. So that to me is still an issue, because I think the whole idea around the middle ground interoperability is going to, I don't think it's a winner take all, but, and I don't think Brad has even said that, he's shooting for like 15%.
Yep.
I think it'll be more than that, but let's just assume that that's 15. That's still a big chunk. And it's one of many business components that of course Ripple has to layer into this. Cause remember, they're using Chainlink CCIP right now, which is connecting to different blockchains. And then I think Ripple may go after the underserved corridors, which are all the emerging markets. And that to me is a hidden secret. I want you to think about this for a second. The United States, one of the most technological advanced countries in the world, we have one of the weakest cellular infrastructures in the world because it's old. Because we were first. Okay. These emerging countries are all cellular first and most likely will be sat phone first on what we'll see coming out of the Starlink or ASTS, where we'll get true satellite to ground cellular use. Imagine if these emerging countries become and create a whole new infrastructure for banking, and they surpass what we've been building for 35 years, 40 years. And they've basically, whether it's a neo, it's all digital, everything. I just see these emerging markets as very, very big opportunities going forward for sure. What do you think?
You know what's interesting as well is that I was reading an interesting article, I think it was 2 weeks ago, where it talked about the growth in Africa and from a financial perspective. And they said $22 trillion has been developed in Africa, invested/developed since the beginning of 2005. America was $8 trillion. So you're beginning to kind of see what you just outlined really take place and take form over in Africa. I did want to make one quick point in regards to this Swift article as well. I remember Brad Garlinghouse came out, I think it was a week and a half ago, and he talked about the G Treasury narrative. They're doing, I believe, $13 trillion a year, zero leveraging blockchain as we speak. Well, we know that that company was just acquired by Ripple. Those products migrating on chain, that is what I think is going to drive, what is the phrase there? A high tide raises all boats.
Yeah.
As we begin to see real companies put money into blockchain-based systems and keep it there, not just use it for a simple transaction, but use it for everyday use cases forever. I think that's going to be this high tide raises all boats. And it's going to add to this global narrative that you were just discussing, where the United States, maybe the incumbents were outdated, were slow, and these other global economies, they're catching up very quickly. But the light at the end of the tunnel could be a company like Ripple migrating these massive companies on chain and then being able to tap into that new infrastructure that's being developed overseas.
Well, look where the population growth is.
Right.
Look at the population growth. I just saw the population growth numbers here for the United States outside of immigration. It was at 1%.
Wow.
At current percent. So that's not sustainable, especially with what's happening here in the US where we're having less children. So you look at population growth in emerging markets, whether you like India or the Middle East or South America or not, the reality is there's going to be a lot more humans. And with humans comes transactions, and with transactions comes volume and control of major markets. So pay attention. I mean, India didn't come into the third superpower by chance.
Right.
You know, that country came in there because of sheer force of population. Once they catch up on the infrastructure side and the economic side in terms of a culture outside of the core culture of India, that's going to be a very I won't say dangerous country, but dangerous economically, you know, to the balance of power globally. So a lot happening there. Let's shift topics and jump over to this. I put this tweet out. The statement is Kraken just bridged the gap. And this is in reference to their Federal Reserve master account. Okay. So they got it, no longer outside the system. This is the same Fedwire that JP Morgan, Goldman Sachs is using. So I would say, yeah, it's big, but I think Ripple's next. I think they're next. You've got them. They granted the charter in December. That was set up. The Fed access is the final piece, I think, for RLUSD to settle at bank scale. That's going to come. And especially with what's going on right now with Garlinghouse, Ripple, and DC. This just seems like the perfect position for Ripple to announce this very soon. What's your feeling?
How fitting would it be, and I keep coming back to this, if Ripple becomes one of the first crypto companies to become a national trust charter, and then they're able to offer stablecoin yields regardless of the outcome with the Clarity Act?
Exactly, yeah.
It's all right in front of our faces, and I feel like it's more obvious than ever. You know what's really interesting as well, Paul, not to go off on a tangent here, but if you look at what's happening from a crypto sentiment standpoint, people are leaving this space and they're losing the vision that is the end game here. What is the end game? Digital asset class being validated as a legitimate part of the American economy.
I have a whole theory on that. And it's a theory of circular rotation of markets. And I got a chance to live through this circular rotation of markets in the era of .bomb. Okay, so when I was a young engineer, we were building and we had all of the insiders, guys that had visions of building something for the future. I mean, we were all very, lofty in what we thought technology was going to do. All right. And here comes the birth of the internet, regulatory rails, not necessarily guidance, but rails, much looser than what Clarity is doing for the internet. And what we had was a defection, a huge defection of some of the biggest minds in technology. Only a handful of the great minds stayed, which end up became the PayPal mafia, which of course we know where that's everybody from Sachs to Thiel to Musk. I mean, you just go down the list, Benioff, you name it. I think we're in that position right now with crypto. I think the great idea and libertarian, experiment that was Bitcoin and was crypto from, where we were in all the way back to 2010 to where we are now, I think the market has shifted and they don't like it. And there may be a whole new era of investors coming into this now versus where we have been.
And so, Paul, you could probably speak to this. So maybe this is more so a question, but when did you begin to see people really come around to the idea of the internet? Because I'm sure it wasn't right after the television.
It wasn't immediate. It was not immediate.
So can you give me a little bit of detail on that?
Okay, so what happened was in 1996, 97, everybody was building. It reminds me a lot of like 2021 here in crypto. Everybody was building. Meta changed their name, Web3, and we were going to have gaming. It was just everybody fell into that trap. But that's what was happening in 96, 97. Then you started seeing a handful of companies develop real businesses. I mean, these were going to be you just had a feeling they were going to be market makers soon. Then the .bomb hit. That's the concern I have right now is, are we in line for one of those big pullbacks? Because that was $7 trillion off the S&P in a very short period of time. One of the biggest pullbacks ever. The .bomb absolutely imploded a lot of tech. And then it took about 4 years after that occurrence, which was 99, 2000, around 2005, 2004, that's when we started seeing the adoption curves. But from 05 to 08, 2008, the bell curve just was literally straight up. If you look at just internet adoption, but more importantly, not the adoption, the number of companies that were real quality companies that were coming out and actually making it. That's where Amazon was birthed, Cisco was birthed, Benioff and Salesforce was birthed, all of what we saw in 2007, which was the social explosion. Meta, Twitter became Twitter in 2007 from Audio, which was a blogging, and a podcast platform. And Jack and the Three, Evan, all those guys, that was when I think it exploded. And at that point, it was just, you couldn't stop it. It was over.
What's interesting is that, so in that example, we are in 1996 prior to the Telecom Act. So 2026, almost exactly 30 years later, we could be entering this big speculative curve. And one of the only things I've come to realize when it comes to retail investors is they have a really hard time conceptualizing why speculation is so important.
Exactly.
In the late 90s, all of these companies exploded, not because their business models exploded, but because people started to place bets on which of these business models would be sustained and most successful. That's what we could be heading into in the crypto space. And I'll throw out some hypotheticals out there. Imagine we're in a situation where Clarity Act is passed, Ripple receives the banking license, and XRP goes to $12, $13, $15, $25, whatever the arbitrary number is. Well, after that 3, 4, 5 years of growth, there is a major correction on the back end where some of these speculative companies cease to exist. And even some of the legitimate companies are hit because of the major downturn in the space. Maybe you could speak to that. Sorry to ask questions, but the truth is I'm very curious about what your opinion is on that. Do you think we're going to have some really similar projects that even though they're successful, maybe 3, 4 years from now, because of the capitulation, they get dragged into the process?
Yeah, I think there's two things that really will play into this. And we're already seeing small elements of it right now. The biggest one, I think, is AI, which changes the game a lot on the timing. When you look at what's happened in AI in the last 24 months, you look and you Gantt that out into accelerated growth models of what could it look like based on historical movement. Apply that to the new metrics, and finance and math, I think, will be the two major areas that it hits the fastest. Finance and math are the markets.
Right.
So you're going to see a pivot quickly possibly a hit and a recovery quickly due to AI. Now, granted, you're going to have the economic impact that we still don't know what that looks like. But this is where these emerging countries get very interesting, because if you have the modern nations, the G7, which is where SWIFT lives in the G7, they run all the G7 financial transactions, and you have an evolution of AI basically shredding through the G7 countries, what rises? The rising tide will be these emerging markets where AI is not shredded through those economies. Who are going to be the players in those markets? Well, it's going to be players like Ripple, and probably a lot of new products that are coming and services that are coming. And I think at that point, that's where the birth of the real winners for the next 30 to 40 years comes out of. So be watching very closely. We're studying this 24/7 right now, trying to figure out how this. Now, the United States could escape it, but I'm really concerned about the AI creep that we will see in the job market here for sure.
And
No
it
doubt.
seems like we're heading towards this clear convergence of AI products and digital asset systems. I
Yes.
think when we hit that inflection point, that's when the everyday consumer is going to start to understand why this has been such a big narrative for the last 3 or 4 years.
Yeah.
I think
Well,
we're only, what, 18 months away from that point, maybe even less, depending on when the
yeah.
Clarity Act is signed, which is interesting.
Listen, this is going to be on everyone's phone. Everybody's phone is going to have an AI agent in it that is making trades lightning atomic level speeds for you, grabbing the best yields on the best products out there, real time, 24/7. Okay.
Yep.
I'm concerned that the centralized exchanges really start to run into problems, because I think decentralized exchanges, DEXs, will probably get some early edge on this. And then you go into even the predictive markets, which is where, and I was talking to Luca Netz yesterday. I don't know if you saw that podcast.
Yep.
Luca hit it. He hit it so succinctly. He said that the emerging class that isn't, they're not people that are rich right now. They are barely making it. That the one thing that they can do is going to be pivot, because they have to, degen out of meme coins, because the meme coin phase is most likely going to be gone. But they're going to degen into the predictive markets. And these predictive markets are going to get big fast. And it's probably going to be one of the equalizers
Wow.
for where this is going. But it's going to get very intriguing and very culturally different of how investing and basically making margin bets are going to be done. So, man, there's so much stuff going
It's a
on.
fascinating time to be alive, and there's another narrative here that I don't know if we've even really dove into yet, which is that when you think about what the banking system is structuring right now, again, they make it seem like there's two sides of the aisle, but we are headed in the same direction that China's headed in, that
Yeah.
Europe is headed in, and that the United States is. We are going into a digital asset system, and I don't think there's a single president that we can elect that could redirect the chain of command that we're kind of
No.
already operating under
Yeah.
right now. So I guess the final piece of that pillar there would be, if we're slowly just sleepwalking into a digital asset system, why not place your bets? And I think that is exactly what's going to happen with the passing of the Clarity Act from these large companies. Clarity Act comes in, industry is validated. They know tokenized assets are going to start launching at scale.
Yeah.
And maybe we start to see them pick and choose a couple of independent blockchains, Hedera, Ondo, Chainlink, Ripple, whatever ones they believe to be most successful. And we see this consolidation of wealth. I'm always reminded of this quote from Brad Garlinghouse where he said, there's going to be a moment where 99% of crypto projects fail. Well, how does that happen? Maybe the Clarity Act, labeling them all securities. And you got 25 that have a free pass, and you got 25,000 that are essentially wiped out of the market. The writing is on the wall for this industry. And I feel like we're on the precipice of this once in a lifetime change. I've never been through something like, I don't even remember the 2008 financial crisis. This is like a whole different narrative. I don't think it's a crisis. I just think it's a global shift, and we're lucky enough to have the self-awareness to know this is happening.
Yeah, I think your situation right now is the bomb. It's the dot bomb. We just don't. It's so tight knit right now, and it's accelerating at a much different speed. So, which is why you have to constantly be on top of this. But there's going to be some huge wins here. There's going to be some huge wins on the digital asset side. I still, my full faith is the direction of where digital assets are heading. Sure, I go into securities right now, oil, energy, a handful of defense and some tech, but it's mostly tech on the comm side, not necessarily on where I still think AI is going to be a little soft going forward. So there's a lot yet to really unpack in terms of where this market is heading. But man, there just is this clarity thing is the linchpin, I think, for where it all begins. And the real, I think the real narratives will start to come out between 6 months and 12 months post clarity passing, because everybody's working toward those now, but being able to execute on them, I think, is going to be the key here. And I think Ripple is still going to be, if not the company to come out of this, one of maybe two or three that become the next generation Amazons,
And
for
so,
sure.
Paul, what's pretty interesting as well is that for a long time, Ripple and XRP, there was like this big argument: is Ripple the owner of the XRP ledger, so on and so forth. That debate has kind of been pushed to the sidelines because of the SEC lawsuit. But
Yeah.
one thing that's really clear is that if XRP becomes what many people in the XRP community believe it will become,
Mhm.
Ripple will be responsible for a whole lot of that. And I don't want to put a definitive percentage on it, but if you think about what's happening with them driving real companies onto the XRP ledger, there's not a lot of blockchains that can make that statement. How many blockchain companies really have a team that's on par with Ripple? I don't know if there is one.
There's not. There's yeah, you look at the talent level that Ripple has, it is just a different class. It's a different class when you look at that. And it's kind of like when you look at the early stage tech companies, you could tell who the winners were, who the Mark Zuckerbergs were. You could pick them. Uh, and it's kind of like what the PayPal mafia was when that was birthed. The amount of brain power that came out of that one place basically dictated the future of tech for the next 30 years.
Yeah.
I think we're going to be in that same kind of scenario right now with the team and teams that are building inside Ripple, that it may dictate the future of finance for the next 30 years. So very, very on point. I think they are continuing, they're not making a lot of missteps either. They don't make big mistakes, which is, listen, I think that's why you see guys like Charles Hoskinson going so hard right now, is because he realizes that, man, when you get outplayed at this level, it's kind of embarrassing, and I think that unfortunately can be an issue for sure.
And I'm wondering too, like, is Charles' whole thing just being totally honest and transparent? Is it making an impact? Is it having a difference on the legislation being passed, or is it theatrics? And from my
This
personal
is theater.
it's theatrics. I
Yeah,
don't think
it's
it's really
theater.
having any impact on what's going on with the private negotiations. I don't think it's having that big of an impact on public opinion, because if you listen to crypto investors, the average retail investor is ready to make money. And Paul, I'm sure
Yeah.
you feel this in your community as well, where people thought 2025 we were going to have this blow off top for Bitcoin altcoins. It
Yes.
obviously didn't occur. And we've maintained, any retail investor who's here right now has gone through the 65% depreciation that we've had across the board. So
Mhm.
people are frustrated with being strung along on these different narratives. They want to see some progress in the crypto space. And the Clarity Act is that progress that we were promised during the
Yeah.
initial election of Donald Trump. That's why I think people don't take Charles' statements too seriously, because it's like we're kind of in desperation mode. And this goes into a political take as well. Republicans aren't looking too strong.
Nope.
Senate, the House, they're writing
Nope.
us on the wall, guys, that Republicans aren't going to control the Senate. They're not going to control the House. We are going to be in crypto purgatory until the next election. And nobody knows what could happen. What
Mhm.
Democratic candidate are they going to roll out? If they
Yeah.
roll out a Vance and Rubio ticket, who are they going to roll out in response to that, right? If it's Gavin Newsom, I think we'll get it done. But if they have this sleeper candidate, somewhat like a Mondami type figure, who he's on nobody's radar yet, but he emerges and people really get behind that,
Out of nowhere.
big concern. And to be
Yeah.
honest, as a younger guy, I'm not necessarily only thinking about the next 2 years, the next 6 years. Where is the American kind of progression train? Where are we headed? Well, if Republicans lose it in 2028, I mean, this could be a completely different nation 4 years from then.
Well, and you look at the stacking model, because what was, and listen, it boils down to what's going on in Iran right now. If Trump comes out of this looking good and not looking bad, because timing is really bad for this. If he comes out of this going into the midterms, still in a war with Iran, the Republicans are not only toast in the midterms, they're toast on the ticket.
Right.
If he comes out of this somehow, and I don't know if there's a master plan here or not, but if he comes out of it somehow prior to the midterms and something good has come from it, oh, then you kind of wonder where this could go for them, because that would change the narrative very quickly. It could pivot it quickly. But listen, it's definitely a coin flip right now, because I think a lot of the centrist moderates that are in the Republican Party are kind of fed up with it right now. They're done. They're like, this is not what we were really looking for, and things aren't going the way we had planned. And granted, maybe this is the other reason that we're seeing all of a sudden a pivot on crypto, because you have a lot of centrists in crypto right now,
Yep.
that are, because they understand the markets more than anybody. I think a lot of you guys listening, what's going on. You're not people that have your head in the sand. That's for sure.
Right. And think about just 1 year ago, I believe it was Donald Trump, almost exactly to the day, tweeted out the digital asset reserve, started off with XRP, Solana, and Cardano.
March
Like,
2nd.
these are the narratives that people like myself were so excited about when the election of Donald Trump came about. I was like, listen, maybe I don't agree with every single issue, but I agree with the border and I agree with the crypto. And that was enough to garner my vote. So let's keep those promises, right? If we can see some
All you
legitimate
got to do.
he may save those centrists and bring them back towards the Republican Party, because I think you're spot on when you say, if this war continues, and the idea of a regime change is always extremely complicated. It's very, you don't have to be a geopolitical specialist to figure this stuff out. To usher in regime change doesn't get done in 4 days, doesn't get done in 4 weeks, quite frankly. So if this is what the signs are pointing to, this may be an elongated process and this may be a long war here, it's going to have a very big impact on the crypto community inadvertently.
Yeah. Well, and it's going to have an impact, I think, also on the markets in general, just with where we're heading, because you've got all sorts of things right now. I'm looking at, where are we on Bitcoin? Let me share that real quickly with you, and then we'll get out of here. Because I think this is interesting to see this kind of chart right now. That's the green candle we're in today. Right now, it's 73. Bitcoin climbing hard.
Wow.
XRP doing the same thing. It's up 7% as we're recording this. So about to break the 150 range. If it comes through 150, it's now out of its low range right now, and your upside is back up around $1.90 on XRP. ETH is setting right now at 2140, also having a big candle, 7%. Then you take a look at things, which this is something you guys should pay attention to. Jupiter, this is something I've been watching for a while. We did a couple of videos on this, only because I think they're going to be one of the derivative stock trading, apps in the future, probably going to compete against X stocks in a big way. Then you got HBAR starting to make a move. There's some good stuff here. And there was gold after a retracement. Let's go in to look at this right here. There's the retracement, to 51, and then back up right now on XAUT, which is Tether Gold. So,
you know what I find interesting as well, Paul, is think about a couple weeks ago, I believe they came out with a fear and greed index, and I reported on it the entire week for my show. It was the lowest reported fear and greed index, lower than COVID, lower than FTX, lower than Mt. Gox. We'd never seen it before. And I said, objectively, guys, we're in an oversold portion of the market. This is a great opportunity in the macro to double down on the assets that you were buying. And I'm sure you have this in your community as well, where people who just entered the market in the last 12 months, they were buying $2.50 XRP. They're buying $3 XRP. They're buying $100,000 Bitcoin. And then they look at a $65,000 Bitcoin and they're scared away. We try to reverse engineer that thinking and say, listen, you own the $100,000 Bitcoin. If you buy 65,000, your dollar cost average,
you just split the difference.
It's a beautiful thing that I think every retailer can use to their advantage. One of the most successful investors on the planet, and he said it best, Warren Buffett, buy when there's blood in the streets. JP Morgan has said this, like everybody can apply this very simple concept. And that's how I built my portfolio back in 2023. There was so much fear. I didn't know for certain that the markets were going to rebound, but I had some thoughts. I had some intuition about where the directions were headed. 50-cent XRP, $35,000 Bitcoin. These were the opportunities that people would beg for in this environment.
Yeah, exactly.
When opportunities present themselves. Retail investors often talk themselves out of it. So
yeah, they do. It's 100% the way it happens. And you're seeing the fear and greed right there climb off the floor, which is what you're talking about. This was where it was 11 right there on the 24th of February. All the way back here, it had dipped down to 5.
Yeah.
On the 5th of February. So definitely at a cold month. And then now here we've spiked up to almost 20, holding right now as Bitcoin price hits 72, getting ready to go into 73. So be on the lookout here, guys. This is a very intriguing narrative. And I think a lot of this is still Iran driven, just the uncertainty drives assets out of the dollar into gold and Bitcoin and a handful of others like XRP. So we'll see it, more of it for sure. You guys know what to do. Follow Abs over on his channel, Good Evening Crypto. And of course, give him a love and a like and a follow. Anything else, man, we can do for you, Abs?
Absolutely not. Just a big thank you, Paul. Always fun connecting, and a little bit of positive sentiment, guys. When Donald Trump was elected, the price of Bitcoin was $60,000, the XRP price 44 cents. Now, Bitcoin's $70,000, XRP's at $1.40. It may not feel like we've seen a lot of change. We have seen a whole lot of change in the crypto space, and I'm anticipating more positive momentum. So big thank you to you, Paul. Look forward to doing it again soon.
You got it, my man. You guys know what to do. Hit the like and the subscribe button right now. And of course, we'll catch you next time right here on the XRP Pod. Take care.